Hey everyone, what is going on? It is Crypto Bobby. Hope you're having a great day, great night, wherever you are watching in from. Today, I have a special interview for you. It is with the CEO, co-founder of XTrade.io, Alexander Kravets. Had a chance to talk to him the other day and really enjoyed the conversation. They're building software tools, APIs for sophisticated mid to high level individual investors and institutional investors. And I thought it was a really interesting conversation to hear kind of how they're going through that process of building that level of tools for somebody who myself is just kind of your standard retail investor learning. And we talked a lot about some of the tools that both institutional investors need and expect in comparison to the traditional financial markets, what the quote unquote whales they might look for when it comes down to trading, investing, selling cryptocurrency, and a number of other things. As a heads up, this video is not a sponsored video, so completely biased here, NOT, not a sponsored video. It is one of many interviews that I have lined up in the near future, including with Clay Collins, the CEO of Nomics, Charles Hoskinson, co-founder of IOHK, Cardano, the team at AirSwap, the team at Blockstack, and Ari Paul, all coming up this month in February. So should be a ton of content. But let's get into that conversation with Alexander Kravets, the CEO, co-founder of XTrade.io. Let's go.
Hey, Rob. Thanks for having me on the channel. Great to be here. So my name is Alexander Kravets. I'm the co-founder and CEO of XTrade.io. My background is in proprietary equity trading. I started off as a trader, 20 years old, sat me in front of a computer, told me to make money or else. And so that's what I had to do. As we were essentially making money, hopefully, we ended up doing that. We built a platform around what we were doing. So every time we needed to have a feature, we would add to our platform. Every time we had to remove something, we would do that as well. So eventually got to a point where the platform became really good after a couple of years, and we started kind of offering it out to other people to use. And so we ended up building a big company out of it. Had a clearing firm, a broker-dealer, market data vendor, high-frequency trading provider, retail operation with 100,000 users. Basically, I ran the operational aspects of it. So every time there was a new project, I had the hat to wear. And so I learned a lot of stuff along the way, about 12, 13 years of that. Then I got into more of an entrepreneurial space where I started building businesses and a business in the real estate and surveillance space and the AI space. And then I got into crypto just about a year ago. I started trading it actually because I was always a trader and kind of saw the inefficiencies that are in the crypto space. I launched XTrade.io to help solve some of those inefficiencies by taking the stuff that I basically built and used and supported and created and destroyed and deployed and modeled for 12 years and just picking it up from finance and putting it into crypto because I kind of know what the expected thing is as far as trading, like what the platform should be like, what the interfaces should look like, how they should work, what kind of uptime, reliability, latency should be there, how to support it. And so that's a very specialized set of knowledge because when people call you 100 times a day yelling at you, you kind of understand what they want. And that's kind of what the experience that I'm bringing into the crypto markets, essentially. And so we're launching these tools this year. We're launching our ICO in Q1 of 2018, which hopefully February, March or so is going to wrap up. And following that, immediately start deploying all the stuff for the people that are going to use it, which is super, super exciting at this point because we've been working on it for a little bit. So
Awesome.
That's kind of who I am and what we're doing.
Well, I appreciate the introduction. And one thing you said was talking a little bit about the inefficiencies in the cryptocurrency market. And I think it's something that a lot of people hear pretty often is the inefficiencies and just the lack of maturity in the cryptocurrency marketplace. And as somebody who's had experience in the traditional financial markets and is now moving over to the cryptocurrency market, I think that's something that a lot of people would be really interested in hearing from you about is could you talk a little bit about the maturity from like an infrastructure perspective in the traditional markets and how that compares to the cryptocurrency market? I'd love to hear your take on that.
Yeah, sure. So when I started in 2000 trading, right, there was basically a few main markets and there were nascent emerging markets, sort of like in crypto where you have, different exchanges. You have, Bittrex and Bitfinex and, GDAX and Coinbase. No, these are the two that are similar, obviously, same company. And they basically function as different liquidity pools. So in equity was a little bit similar where you had Island, Arca, Bats, Direct Edge that kind of rose up to challenge the NYC and NASDAQ. which eventually were bought out by them. So the infrastructure was sort of different networks that you could trade on. And that's what we started doing. That's what our edge was when we started trading. But the difference is that all these markets kind of work together, right? So if you have an order that goes out to one market and there's a better price somewhere else, the order actually gets rerouted to a better market. There's a price improvement. So you always get price protection. The other thing is that all the stocks that trade, they settle in one central place called DTCC, Depository Trust Clearing Corporation, right? So think of it this way. If you're trading between multiple brokers, at the end of the day, all the brokers have accounts in one place. So they just like move the money from here to there, from there to here, right? And move money here, stock here, right? In crypto, you don't have that. You have 100 different markets, and the trades settle individually on each market, which is good because it settles right away, but it's bad because they don't communicate. So as a result, things don't trade in the same prices. So that's why you have enormous price differences between one exchange and another. And that's really the biggest problem. The other problem is liquidity, right? So like I said, when you have multiple markets working together, and they kind of share, the actual volume. So imagine like a Bitcoin was trading in one market, or even if it was trading at 100, but they talk to each other, you wouldn't have that enormous volatility where it goes from 20,000 to 6,000. Just because there's not a lot of liquidity on the bid, right? So if you imagine the trading in one spot, or at least connected, it would be much more liquid and it would be much less aggressive price movements, much less volatility. Crypto, you don't have that. So every market has its own book. Book is typically thin, except like right on the inside. So what'll happen is, as soon as you have a large price movement, the markets move tremendously, very quickly. And so that's a huge problem. The other standards, right? So APIs. API is like a way to automatically trade, right? To go into an exchange with a computer program, be able to get market data automatically, and then send orders automatically, right? Using a computer program or just using an interface between your existing order entry system and the markets. So typically in the financial space, there's one protocol that's used for that across the space, because there's different programs written in different languages, but you want to have like if you go to Europe and you speak English, right, you're able to talk to the German guy, the Spanish guy, the French guy, the Croatian guy, right? Because they all have the English knowledge, right? So in equities, that's called FIX, Financial Information Exchange. Should be FIE, but FIX, I guess it's a little more catchy. So all these systems talk to each other using FIX. And in crypto, you don't have that. Each exchange kind of has its own API. Sometimes it's FIX, an older version of FIX, a newer version. Sometimes it's a WebSocket API. Sometimes it's a REST API. And so in order to trade across multiple markets with automated interfaces, you really have to code literally 100 to 100 different markets. So it's like if you're going fishing in the tuna boat, you have 100 rods you got to untangle before you start, which is a huge bitch, right? Because it's crazy to do. You have to do that. And if you're an institution, you don't want to do that, right? You want to just be like, all right, I'm going to write to one thing, and then from there, you're able to go everywhere. And that's what we're doing. So we're creating a product for that called the Fix API, XTrade Fix API, which we've already built. Another issue is interfaces, right? So if you have an account at an exchange, you open the web browser, you start trading, you have your limit orders, your market orders. That's basically it, right? But if you have another exchange, you have to open another browser window and another. So you're like, click, 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 cancel, click, cancel, click, cancel, click. And that's across 2 or 3. Imagine you have 10 or 20. Kill yourself, right? So the problem is that you have very basic web pages and they're also not secure. So somebody can like there was an example with HitBTC, right? So somebody was DDoSing HitBTC. Website went down, they put up a phishing site. So then they collected all your passwords. They stopped DDoSing HitBTC, logged in, pulled money, right? That's because it's a website. So you can get man-in-the-middle attacks. You can do a lot of weird stuff with it. What I'm used to is a downloadable platform. So a physical application that you download onto your computer, an MSI file, right? You log in, it's whitelisted IP. So like your address is whitelisted at the server and back and forth. So you have a private directory. Nobody can get in the middle of that. It's an application, right? So it's much more robust, much stronger, and you have more order types. So instead of like relying on exchanges to have an order type, you can actually create one on your side. So one example is a reserve order, right? Very simple order type. Let's say you want to buy 1,000 Ether, right? Now what happens if you put 1,000 Ether on the bid at any exchange?
It's going to jack the price up.
That's right. Yeah, it's so simple, right? Like, oh man, this guy's buying 1,000 Ether. I'm going to buy the offer so that it's going to run up, and then he's going to get screwed, right? So what if instead of showing 1,000, you show 1 Ether, and every time somebody sells to that 1 Ether, send another Ether and another and another. It's called the reserve order. You basically have a displayed quantity and the actual reserve quantity behind it. We can do that on the client side, and that's the platform that we're building called XTrade Pro, which is a downloadable platform that has aggregated all the market data from all your exchanges into one order book. So instead of having 1, 2, 3, 4, 5, 6, you have one, right? And you have order that are advanced that are client side. You don't have to rely on the exchanges, and you have keyboard shortcuts. So instead of having to click, 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 you hit one key, and your order goes out to the best exchanges at the best available price, the best bidder, the best asker, 1% down, 1% up, or at the lowest net commission, or
Sure.
it time slices your order. So let's say you want to buy 1,000 ether. They'll say intelligently, okay, there's 100 in the bid here, 200 here, 50 here. If I put 1,000, I'm gonna die, right? So I'm gonna buy 20, 20, 20. Wait 10 seconds, buy 20, 20, 20. Put a post on the offer to kind of move it down a little bit. Put another bid over here, 555, and just like intelligently execute that order for you. So that's been in the equity space for years. Intelligent order routing and the smart order routing.
And
we can build on the client side, So it's decent.
So one question I was going to have too, just off that is, I mean, as far as like the lack of availability with like intelligent order routing, like you just mentioned, is that really just due to how brand new the crypto markets are? Because like you said, that's available now in the traditional equities market. Is that just not really built out yet from most people? Can you talk a little bit about kind of where that is, and that's kind of that part of that gap you're looking to fill at this point in time? It sounds like.
Yeah, exactly. So, obviously these exchanges were started by blockchain technologists, and nobody expected a year ago for this place to be so huge now. Mm-hmm. Well, now it's less with the last couple of days, but essentially, it's exploded as far as participation, as far from the retail public, from the trading public, and so nobody really anticipated these issues to be occurring at this scale at this time, and so these exchanges that were built by blockchain technologists don't really have the infrastructure, don't have the backbone, don't have the financial know-how to really move quickly enough to accommodate and take those technologies, integrate them. It will happen for sure. It's just a matter of when. So it's just a matter of the market's, you know what I mean? So, but if you think about it, like you have like a Venn diagram, right? You have on one side, all the blockchain technologists, on one side, all the financial technologists, right? And the intersection is like this, right? It's tiny because it's not a typically like a complementary knowledge side, blockchain and finance, right? So that's kind of the void we're trying to fill.
Absolutely. As far as just like the target users for XTrade.io and for some of the products that you're building or some of the solutions that you're building, is it mostly institutions? Is it individual investors? Is it like high net worth individuals? Like who do you envision as like some of the main users for something like XTrade.io and the products that you're looking to build out, kind of what you had just mentioned?
Right. So that works with the roadmap. So essentially, as we release each product, we have a different population using it. The first product is the Fix API, which is basically an automated way to access all your exchange accounts with one interface. That's obviously more for the algorithmic trader, for the institutional clients, for hedge funds, for guys who have their own order entry system, sort of like the top tier of the market. From there, we're going to release the XTrade Pro platform, which is the downloadable application. So that's a little bit more towards the retail side, more towards active traders. Still guys like who use Bloomberg terminals, but that way, they have a GUI, graphical user interface to trade with.
Sure.
So that's just active guys and retail guys as well. Maybe just on the higher market tier, like middle to high market. But it's still totally usable by retail guys. As long as you have an account at multiple exchanges, you can use this platform to arbitrage between them. You can execute to aggregate all your positions. So that's useful there. The third product is something we call XTrade SPA. What that is a way to execute across multiple exchanges with one account. So what we do is we partner with exchanges where if you have an account at a partner exchange and you send an XTrade an order, we will execute it through our accounts at a different exchange and deliver it to you at the partner exchange. So we're not actually an exchange, we're more like a delivery system.
Sure.
And the trade is placed between us and the client on the exchange side. So we're just a regular counterparty in that transaction, as anybody else would be on the exchange. But that's going to allow you to execute through our liquidity pools across multiple exchanges. And that's even more for the retail guys, because then they don't have to go through the process of opening 1,000 accounts. They'll open one, obviously go through all the KYC, AML inherent on that exchange, transactionally based on where they are. And then from there participate as they normally would, except there'll be more liquidity at better prices. That's the only difference. The fourth product that we're launching, we're going to announce soon officially, is a dark pool. So we get calls a lot from guys that are, I want to buy 5,000 Bitcoin. I want to sell 5,000 Bitcoin. Where do I go? There's a few places you can go. They usually charge fairly high commissions, and they work the order for you over several days. They make a spread on it too, which not always disclosed. And so the way to kind of mitigate some of that is to create a system where you have large blocks of orders executing without having it light up in an exchange. It's basically dark execution pool. And then we have banking partners that we're working with to facilitate the fiat portion of it. So
Okay.
what'll happen, a large partner will send in, open an account, go through KYC, AML, send in fiat. We'll help them execute the crypto side of it. And that's going to allow large blocks of orders to execute. But that sounds nefarious, like, oh, these big guys are trading in the dark. It's scary. But really what happens is these big orders move markets. They make things more efficient. And also, a lot of retail orders are typically aggregated together and filled in one shot from a lot of order entry systems in the equity space. And you can do the same here. You can offset those large orders, large blocks of orders across one large institutional order to mitigate some of those price movements and make it cheaper and easier to transact. So there's a lot of benefits here. So essentially, we're launching mostly middle to high market as far as the participation is concerned, but it's still going to be accessible to retail investors just based on their trading level. As long as they trade enough for it to make it worth their while to use our stuff, they can use it. No worries. Absolutely.
But it's interesting to hear too, and I think, I mean, there has to be a level of products and solutions for, kind of for every class of investor. The kind of the let's say the average to entry level retail investor who might just be going to Coinbase and hitting on their mobile app and buying something with a debit card or a bank account. And then there's obviously
not anymore.
different levels.
No more debit cards.
No more debit cards. Only bank.
But credit cards. I'm sorry.
That's funny though. But I mean, as far as the more sophisticated or higher level of investing tier as well, I think that's a really interesting point too. And it's funny because I get asked a lot of times about people. It seems like there's a lot of people out there that have this infatuation with like the quote unquote whales in the cryptocurrency world, or the people that are making, moving markets and the market makers. And I think that in a lot of respects, there's kind of, it seems like a lot of people don't get the point that there is OTC trading. There are dark pools and things like that where, if I want to buy and sell, if I want to put in an order to buy 1,000 Bitcoin, I'm probably not going to go over to Coinbase or to GDAX or somewhere like that, throw in a market buy of 1,000 Bitcoin and go on my merry way. There's a lot more efficient ways to do that. And it's interesting to hear about kind of the products being built for individuals to do that now.
Sure. And the other thing about the crypto whales, right? So a lot of these, large market participants move markets because they have large blocks. And in the crypto space, somebody with, $50, $100 million is a sizable participant, right? But there's an enormous amount of institutional money on the sidelines waiting to enter the space. And they're waiting for more regulation. They're waiting for more cohesive custody and settlement system. More of a regulatory element to kind of ease some of the uncertainty. Think about it. If you're a large bank and you have clients that are pinging you every day saying, how do I buy Bitcoin? You have to then figure out how to custody that Bitcoin, how to execute it, how to open 100 exchange accounts, which you don't want to deal with. So I think you're going to have more of that framework coming down the line this year, more of that regulatory element, not so much to stifle these markets, but to maybe make them be more accountable, more transparent, have more systems in place to explain how the custody aspect of it works, the support aspect, the security, maybe some secondary insurance that's going to function similar to the SIPC as it does in the US, where you have $500,000 in your account protected, 250 is cash, 250 is securities. And so by creating those systems and creating those mitigating sort of technologies that allow participants to engage with these markets that are larger, that's actually going to create more stability, right? So if there's more of those larger players that participate that are more mature, even though they're quote unquote whales, they're not whales in the sense that they're trying to game the markets or put out a PR and then move a particular coin. They're more about executing orders for their clients and kind of maintaining a market, making a spread between them, or just adding liquidity to the actual ecosystem, which is going to create more stability, because liquidity breeds liquidity. If there's more institutional participation in the crypto space, it means that there's more on the bid, more on the ask. There's more that absorbs these price movements that are just crazy right now. And that creates more stability, more certainty in the space. And while it does limit some of the upside momentum, it creates more of a inviting ecosystem for the retail public to participate.
Sure.
It's not the public. It doesn't worry about Bitcoin dropping 95% in one day because the SEC decided to testify, or Tether might not be real, or whatever it is, and you might not, have to deal with a spread that's like $100 to buy and sell your Bitcoin, because every time you buy and sell, you pay an enormous commission plus an enormous spread. A lot of these exchanges, and so while you could say that large market participants are gaming the system, you can also argue that the more mature ones are actually improving it and benefiting not just from their point of view, but also from their clients' point of view, and from a retail participation point of view, and especially now that it's happening worldwide. I think it really needs to happen, as far as the ecosystem is concerned, to have more stability. So that's just my, half regulatory, half trading, half cynical viewpoint. But, it kind of needs to happen. We need a little bit more regulation, a little more certainty around the space. And I think it's going to be really good for that to happen.
Yeah, I mean, I think there's definitely interesting points, and especially from somebody that has experience kind of working on that kind of level of the market, as well as just kind of working and I'm sure hearing a lot about the regulation that might be coming down the pipe or things like that. And I think even now there's that the Congress hearing with the SEC and the CFTC literally right now as we're talking.
Yep.
So I'd be interested to after we get off the call, I'm probably going to go back and review what was going on with that. But yeah, certain levels of regulatory clarity and things things of that nature should be pretty interesting to hear develop, and then how that might impact, like you had said, certain things like custody of cryptocurrencies or crypto assets, and how that impacts institutional participation and things of that nature. I'm pretty fascinated to see that pan out. So I appreciate the thoughts there.
Sure.
As far
and
as,
just saying
sure.
and just so you know, it's already happening. There's already some banks, U.S.-based banks, that are working to custody fiat currency for multiple exchanges, and you'll see that come out in the future, in the next few months.
That's
a good thing.
Yeah, that's interesting to hear too, and I think even like Coinbase too, maybe on a smaller level, but I think they were had Coinbase custody or has Coinbase custody now, which I think is minimum of like $10 million of assets under management with Coinbase, and a pretty fat fee charged for that as well. So definitely a lot of money to be made in that market.
Sure.
As far as partnerships go, I would certainly imagine that, I guess, the greater number of partnerships, the more beneficial that would be to your users, to the companies, individuals that might be utilizing the XTrade.io product set. Can you talk a little bit about maybe the partnerships you have in existence now, and what you might be looking to develop in the future as well?
Sure. So we're working on multiple partnerships. A few that we've announced are, obviously our JV exchange, a joint venture partner exchange, which we're going to be doing the custody for the multi-asset, multi-market execution for crypto. And so CX.io is that partner. We're partnering with execution systems that do multi-asset class execution for broker-dealers. They're going to add crypto as their route through us. So that's XTrade and some other guys. Working for even with crypto companies that are out there in the space that are building like automated trading bots, called a company called Gimmer. We have a few more partnerships that we're finalizing with CME and some other guys that we're going to announce very soon. Some larger market participants. One of our advisors just joined us from Divisa Capital, one of the largest FX brokers in the UK. They just raised $100 million earlier this year, early in 2017 rather. And so a lot of those institutional clients are coming on to kind of potentially utilize our platform. That'll be announced down the line. Our dark pool partnerships are also going to be announced fairly soon, because the way dark pools work is you want to have more liquidity. So even if it's like counterintuitive, where like, oh, I have my own dark pool. Why would I want your clients to trade there? Really, you want more participation because it's going to create more volume, more transactions. And so we're partnering with a lot of guys in the space that are creating their own as well. And a lot of stuff I really can't talk about just yet because it's just in informative stages, but a lot of institutional participation, a lot of active funds that are going to be trading through us, a lot of partnerships with regards to market data, with packaging, some of the offerings that we have into other structured products that are going to be leveraged by traditional market participants. So those are some of the ones that I named that are there now. But as soon as we finish our raise, we're gonna go ahead and go full speed with setting up those partnerships, because that's the quickest way to expand, is to partner with existing players and just create a complementary suite of services that works for everybody in a win-win-win basis, for us, for the partners, and for their clients, and also for our clients.
Sure.
So kind of a win-win-win type of deal. Yeah.
Awesome. Looking at just what you're trying to do in the space, and I'm curious as far as this goes, are there any other companies or any other organizations out there that are trying to do something similar to XTrade or to the product suite, as far as kind of whether it's the fixed API or kind of creating one single a one-stop shop place to run orders across various exchanges. Is there anything else out there now that's really kind of maybe in that wheelhouse or might be viewed as a potential competitor or anything of that nature?
Sure. Yeah, there's a lot of products that are kind of trying to accomplish some of those things, but I think I view them as complementary, not as competitors. In regard, you can't have a zero-sum view of this where there's like one competitor and that's it. We're done. This is, it's crazy. How many people make cars, right? How many people make chairs, and how many people make gas for the fireplace behind you, right? Actually, yeah. So it's like, so you have Coinergy. Coinergy is a cool platform that aggregates market data across all your exchanges, and you can send orders. But it's web-based. It's slow. We're more of an institutional grade product where we actually have data center infrastructure. For instance, at DC3 Chicago and Y4 New Jersey, which is cross-connected to a lot of exchanges. The edges of cloud provider sort of infrastructures, the CDNs are close to those exchanges as well. So like if the guy's here in the cloud and we're like here to the exchange, it's like a very quick connection. Mm-hmm. But if you over the internet, you have to go like that to get to this guy. So our latency is very low as compared to a lot of providers over the web. You have Omega One, which is a great product. So what they do is they take a large institutional order and they'll split it up into small pieces. And they'll work it over multiple exchanges, which is a cool product. We're not really in the same space because we're more of a direct market access product or DMA. That's my specialty. So essentially, we're providing high frequency trading and direct market access tools to the people that know how to trade. So I'm a believer that people know what they're doing. They just need the tools to be able to do it. So that's kind of that. Coin, I think, out of Japan. I'm not sure if I'm saying it right. There's also potentially competitive hours. They're doing more of a retail focused product. They have a cool platform that's interesting, and they're using their token to facilitate trading between exchanges, which is also a cool idea. So yeah, some of those guys are kind of in the same space doing some of the things that we're doing, but it's not wholly competitive. Our niche again is direct market access infrastructure, cool. Institutional, middle market, high market, large volumes, large groups of traders, direct market access infrastructure. So there's a few overlaps, but really our core product is quite distinct, and I feel that we'll do pretty well this year.
Awesome.
Given so far. Yeah.
That's good to hear, and definitely familiar with with some of those too. I think I read Coin, or I'm not exactly sure how to pronounce it. I was pronouncing their token Quash until somebody's like, "Yo, that's Cash."
Really? So there's a Q in there. The Q is a Q as far as I know. Maybe the Q's are different in Japan.
I don't know. I don't know if I was messing up the pronunciation, but I read their white paper recently. I thought it was pretty interesting too. So
they're solid guys for sure. Yeah, they're awesome.
So cool to hear about that. And then even the comparison of like Coinergy. I use Coinergy. But it's kind of, I think, even maybe a good just super high level comparison as far as like Coinergy being for somebody like myself who is not exactly a sophisticated trader, and then something more along the lines of like XTrade.io for individuals or institutions with significantly more sophistication when it comes to executing orders and things like that. So pretty interesting there. As far as the actual ICO and token generation event, token sale that you are executing now, I guess two questions for that. Why do an ICO, and then why have a token as well? Could you, I guess, maybe cover both of those things? I think those are always interesting questions to ask.
Sure. So the token is a utility token, ERC20 utility token, to be used as a means of payment on the network. And because we're in the crypto space, we figured it's going to be a good way to raise awareness of our product by doing a pre-sale of the token for the people that are actually going to use it. So it's a great way to distribute it among those market participants, and it's a great way to raise the liquidity that's necessary to execute across multiple markets, because we need to actually have accounts in multiple exchanges. We need to be able to do trades and then move the trades between these exchanges, right? To kind of sort of a net settlement cycle that we're going to do concurrently throughout the day. So that requires some capital. Obviously, it's going to be leveraged by margin and by credit lines that we're going to have with other market participants, with banks, with exchanges, but that's necessary. And so the funds are really there for that. And the token is a great way to expose the trading population in crypto to our product. So that's kind of the what and the why. Sure. Tokens are going to probably wrap up by Q1 of 2018. Our public pre-sale is going to start on the 20th of February. So if you go to XTrade.io, join our whitelist, all the information about the pre-sale and all the terms, all that kind of stuff is going to be put out via that whitelist email. We figure that if people are actually going to be participating, they're going to want to know what's going on. And we don't want to just like spam everybody with what we're doing.
Yeah.
And so that we're a little bit more. We're like a financial technology company that's like running a token sale because it's complementary, not an idea that's trying to raise money with a sale that may or may not execute. So
Yeah.
we're a little bit more serious about what we're doing. We have a real business behind us. We have real clients, real technology. Our first product is actually already built. The fixed API is in production. If you go to our website at XTrade.io and click on videos, you'll see myself and my partner Sergey, who's built these systems for 12 years from his software development company, for banks, hedge fund institutions, for market data, for execution, for data center infrastructure, matching engines. And so you'll see what we're doing there. My other partner, John Jacoby, who worked at Goldman and JP Morgan in structured products, has a lot of great institutional relationships to leverage to kind of get clients into the platform. And so you'll see us sitting there basically demoing the MVP. So
Sure.
It's a real. And so, that's kind of what we're doing with the token sale, our timeframes, how to participate, join our whitelist, join our Telegram, follow us on social media, and I'm always available. People are always asking me, why am I in Telegram answering questions? And, I figured it's a good thing to do. If it's my company, then I should be the one that's answering. And so, that's kind of that. And the other thing is, if you're on our Telegram and people ask you for, if you want to participate in a private pre-sale and send them some Ether, don't do it. We're not responsible for that. I keep saying that. But please don't send anybody anything on Telegram. It's only going to be the email.
It's crazy the level of like scams and things going on with ICOs and like even like now on Twitter, the people that are changing their name by like one character, and it's like Vitalik Buterin on Twitter. You go there and it's like somebody's like, oh, donate however many Ether and I'll send you this BS token in response. It's like it's the level of scams going on right now it's frustrating for sure.
There was one guy who like literally put my photo and he had my username like Alexander_Kravets on Telegram. And I'm like, how the hell did he do that? It turns out that when you go Alexander, the second letter is L. Instead of doing a capital L, he did an I, which you couldn't tell the difference, right? And so it looked exactly identical. It was my picture. We actually talked to that guy. And we asked him how he did it. He told us, and then we gave him a token bounty. So now he actually works for us, weeding out other scammers. So we take a guy like that into an honest guy. And that's actually kind of engaged with these guys. And my team is fantastic in being able to do that. Always trying to think out of the box as far as like challenging people, but actually engage them and try to help us. And, it's a win-win for him too now, because now he gets to actually earn money or earn tokens rather, honestly, and help us and better the community. So, hey, that's the end. At the end of the day, I think people want to do the right thing. Just a matter of incentive.
Well, that's definitely an interesting way to approach it, and kind of a I'm sure an effective way too. As far as anything maybe I didn't ask at this point in time, is there anything that maybe I left out in the discussion, or anything that you'd like to kind of tell the audience that might be watching at this point in time?
Yeah, sure. So one of the key things about what we're doing is that we're not like inventing crazy stuff or doing a moonshot project or tokenizing your cat or whatever it is. We're actually taking like existing financial tech that we've built and used and know about, battle tested, over and over and over again in exchange and data center environments, and taking that stuff and bringing it to the crypto markets, right? So we're not like replacing stuff. We're just literally adding to it in a way that works really, really well. It's going to allow market participants like institutions and traders and people who would normally access the markets in a specific way, the same way. So it's going to be much easier for them. I'll give you an example. Like if you're a trader, right? A lot of guys that I know use the same platform for 10 years. Even if it's like nine years outdated, they'll still use it because they're used to it. They're making money with it, right? If you tell a trader, hey, you have to switch your entire order entry system, he'll take one of his monitors off and throw it at you because he's not going to want to deal with it. So that's what we're doing. We're making it easy for people to that are trading to use use the crypto space, use the crypto markets in the way that they're familiar with, and so that's really our strength. We're an infrastructure project. We're serious guys, doing a serious thing with real products, with real clients in a way that makes a lot of sense. So it's more of a reality-based approach to running a company as opposed to a lot of crypto projects, which are a little more ethereal. No pun intended, in their application of their technology and potentially the use cases that are down the line, So that's a little bit, we're just like, more of an infrastructure, picks and shovels kind of guys, but we think the use case is really good. We think there's a great business around it as well. So
awesome.
That's it. But it's but it's very important that our token is utility token. It's not a security. It's not profit participation. The token is used to pay for services on our network, and that's very important. We make sure everybody understands that. So
Yeah, absolutely. And I think, I mean, when you look at the product set, it's, it seems pretty apparent, at least in my opinion, that there actually is utility behind the product set, hence the utility token.
Yep.
So it's, I think that's definitely a positive thing. And the type of product set that you're bringing to the marketplace, while it's not specifically for everybody, I think it does benefit a lot of people having that level of access to sophistication, if or sophisticated products, if need be, if anybody grows that level, or if they're at that level, and then some of the efficiencies that might provide to the marketplace in the long run. So I think it's really interesting to see how it might develop in the future. So I'm definitely excited for that as well.
Thanks, Rob. Yeah, and we're always looking to release new stuff down the line. So there's always going to be market segmentation, and if it makes sense for us, we can always leverage existing fintech that we've built to kind of release more to the general public as well. So that's something down the line that we would look to potentially explore. And we've done that before. And my previous job is we literally took the economies of scale that we had as far as being able to clear massive amounts of trades cheaply and offer very, very low commission rates to the public. So like we went out there, like I remember 2006 or so, with like a $5 commission, when the commission typically everywhere else was like $10 or $15 even. Because we're able to do that because we did a lot of stuff together. And we had our own vertically integrated systems, our own clearing systems, our own execution systems. Same thing in crypto. If you're able to kind of aggregate a lot of volume and have a cheaper rate, you're able to kind of offer that to the general public as well. And if you can create technology that's going to mitigate some of these issues with liquidity, with transparency, with price protection, with providing the best price, you can then create a retail product around that that's benefits to retail public in a very, very direct way. Sure. And so, but the step was always to build the complicated stuff, and down the line, create more of a cohesive retail product that's based on the larger structures that are in place that you've built previously. So that's kind of how we're moving, and that's our path forward.
Awesome. Well, I think that was super comprehensive, and I really do appreciate the time. So thank you so much for giving us some insight into just your overall thoughts on, I think, crypto infrastructure. Was really interesting to hear kind of some of the behind the scenes that's going on that somebody like myself, and I think a lot of the other people, don't always get that level of insight. So number one, I appreciate that, and also the background on XTrade.io and what your team is looking to do. So I really do appreciate the time today. Thank you so much.
Rob, thanks so much for having me. Really a pleasure to speak, and I hope to see you soon. Let me know how that meeting turns out. I'd like to hear your thoughts with CME and the SEC. Yeah.
I definitely got to dive in after we get off the line here, but it should be fun.
Nice.
But I appreciate the time. Thanks so much.
Right, Rob. Have a good one.
All right. Have
Take
a good
care,
one.
man.
Bye.
Cheers. Bye.